All right, so in this video, let's talk risk management strategies. How do we actually manage the risks that we might have? So basically, we have a few, pretty much four main options here. So reduction or mitigation, transfer, avoidance, and acceptance or retention. So reduction or mitigation. So the idea here is we try to reduce or mitigate the losses or the risks that we might have. So in a prior video, I used the example of skydiving. So with reduction or mitigation, the idea there would be, well, maybe we have a backup parachute for skydiving. We go skydiving with an instructor who has experience. We do multiple classes, things to try to reduce the risks of a really bad outcome happening while skydiving. If I am looking at risk transfer, that would essentially be buying insurance to cover the risk. So if I am looking at, say, the risks associated with driving an automobile, if I cause an accident in most states, then in most states, I am responsible for the damages caused to the other vehicle or other property. And so by paying an insurance company premiums, I transfer the risks to them. And so basically what happens at that point is that for a fee, they then take on the financial risks associated with that. So that's a possible strategy for some types of risks. We can also have avoidance as a risk management strategy. So back to the skydiving example, or perhaps the car example. For avoidance, I just don't go skydiving, or I don't drive a car. So I just try to avoid having those risks at all. So that's a possible solution as well. For acceptance or retention is another strategy. This would be perhaps for something that has a low probability of happening, low financial losses if it happens, and so I maybe just accept the risk. So if, and I talked about this in a prior video as well, so if, for instance, you are capable of changing the tire on your vehicle, and you think that it's pretty unlikely you're going to get a flat tire, maybe just accept that risk. And so if it happens, you just pay for the tire out of pocket, you change the tire at the side of the road, and so forth. Now, for some people, if you are not as capable of changing a tire, and that's not something that's in your wheelhouse, kind of a pun there, then in that case, maybe you do pay for some coverage and you pay for some roadside assistance coverage or something like that. But if you keep the risk and you decide, you know what, I'll just change the tire at the side of the road if I get a flat, that would be more of an example of acceptance or retention of the risk. What risk strategy you use could vary over time. So for instance, if you are younger and you have a younger family, maybe you engage in risk transfer as it pertains to the financial losses associated with your premature death. So you buy life insurance and you transfer that risk of financial loss to the insurance company. Now, by the time you get to retirement age, let's say you retired yesterday, and you've got all kinds of money in the bank or in your investments for retirement, and you don't have any dependents anymore. Well, you could look at that and realize, well, what exactly is the need for the life insurance, right? Because if you pass away, you don't really have anybody who's depending upon your financial resources, because you don't have any dependents anymore. So why do you need the life insurance? So at that point, maybe you move into more of a strategy of acceptance or retention. Now, on the other hand, if you are married at that point and you do not have much of a set of retirement investments, maybe having a life insurance policy does still make sense, because maybe you were thinking you'd have to work part-time or something like that to make make ends meet, and now we still have a financial need there. Or perhaps you have a child who has a disability and you are still a caregiver. Well, in that case, maybe we still need the life insurance to make sure that there are financial resources available in the event that you die, even if you are near retirement age. So it's important to note that what risk management strategy you use could vary over time, and it could depend a bit on your circumstances. So you have to be constantly updating what your circumstances look like, what your risks look like, and what the appropriate risk management strategy would be. Hopefully this video helps. Have a great day.